to the RationalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief free video. I'm not quite sure what to call this. Daily Brief party. I don't know. Anyway, happy, what is it? It's the day before the big U.S. Independence Day holiday. Woohoo! I don't think anybody else actually has the holiday on the 4th of July. So it'll just be, it's going to be one of these funny bankster event days kind of thing tomorrow. So be prepared. And I would imagine that through the whole weekend, this is going to be really screwy. And once we come back from the break on Monday, we can probably actually start, really examining the market for, fund flows and that kind of stuff for first 2 weeks of the quarter kind of studies. We are, of course, heading into the second half of 2024 now. So I sure hope you enjoyed the first half. And this also is the first 2 weeks of the third quarter. So we'll be watching very closely the different sector rotation performances. In fact, actually, we even have our sector ETFs. And actually, it's a really interesting development going on in the market. Nothing really to get too excited about here. A lot of meh out of the stock market, which I suppose is good because we're only going to get buy signals if the sky is falling and everybody in the public is freaking out, which makes sense. It's the cool part about crypto and venture capital is it moves at light speed. So you can see venture capital, it swings violently way overbought. And of course, everybody's moon, blah, blah, blah. This time it's different. Oh, God. Anyway, and then we crater and we go absolutely into the floor and maybe even to the basement. And, maybe we might even start I wouldn't even be surprised if through this holiday weekend, we do hear kind of chatter from crypto people about things like suicide hotlines and stuff. It's a sad hallmark of venture capital, extreme emotional reactions. And ironically enough, if you actually want to win at this game over the long term, you have to get rid of the emotions. And as a great analogy, you can see most of the stock market is kind of meh. It's interesting how the real estate sector is a little bit overbought. But if we actually backtrack and look at things like crypto from the same perspective, as I had said there a moment ago, where's our crypto? There it is. This space is because it's venture capital. It's highly schizophrenic. So look at all the attractives we got in hunting longs, even on things like Shiba Inu. A lot of meh. And unfortunately, we still have a lot of assets that are still kind of expensive. It's interesting how things like Bitcoin actually have fallen out at, well, no, I beg your pardon, excuse me, there's Bitcoin. Still a bit expensive. And I did notice that things like Ethereum, interesting how Ethereum has fallen out of the, be careful. And now it's fallen into the, this is not really overbought, not really oversold. Suppose we could probably take a look at that in earnest, but there is that Ethereum chart. And of course, when Ethereum was spitting out sell signals and stuff, the weekly commodity trend survey was like, avoid this thing like the plague. And sure enough, down we go. And actually, as kind of a side, you can see crypto and Bitcoin and price action a little bit further down the itinerary. But still trying to get used to framing my behavior a little bit better here for you guys. But anyway, so we'll come to that in a minute. But point here, breadth wise, broader market is kind of but something that we actually got today, and it was dovetailed with what we saw here recently, and what I really wanted to show you. We had some pretty bullish indications. This is our screener. This is just a raw momentum push screen. I really like it as a very simple, clean illustration of where the money is flowing in the market. And of course, if you see W's, obviously W's are bullish, M's are bearish. So, a couple recent signals just over the past day or two. I'm not sure. Amerin, I'm not quite sure what they do. Emerson Electric, that's interesting. Good looking W's there, right? AMD, Advanced Micro Devices. We see the NASDAQ starting to come alive here. And I suppose when we talk econs, that'll make sense. But interesting how AMD is coming alive. But this is actually what really surprised me was a lot of these financial services stocks were coming up on the screener here recently. So we had things like you saw there just a second ago, bank stock, Fifth Third Bancorp. I don't know what the hell that is, but geez, look at those W's. Comerica, which I think is an insurance company. Key Corp. Jesus, look at that W. So pretty. Morgan Stanley. There's another W. So, I've talked to you guys about this recently. What is this trying to tell us about sector rotation? I think there's actually a lot of people that are betting. Maybe I can show you this over here. I think there's a lot of people that are betting that we're pretty close to the Fed down in the States finally acquiescing and starting to lower interest rates. They've gotten in front of this inflation problem. Of course, that's another conversation altogether. But the fact that they have raised interest rates so dramatically, they've really slowed the economy down dramatically. But the point here is if you see things like financials, and it's interesting how the real estate was a void there, but interesting how we got a perk up in the financials. So that would kind of mean that we're sort of right around this area here. Not really bear market in the stock market land, but is that maybe more a function of the money printing and of course, M2 money supply and the effects on the indexes? I actually think if you look at the market from a adjusted basis, stock market really isn't going anywhere in earnest, which of course is always a fun conversation to have. I think actually this is probably, ironically enough, in the 1930s, right, they weren't allowed to F with the money supply. So this was the actual raw economy. Here, this is the monetary adjusted stock market, taking into account all the hyper print money printing. And you can actually see that the stock market really isn't doing a hell of a lot here. But at the same time, too, are we getting ready for a major breakout? And believe it or not, I think this is what our future over the next 10 years is going to look like in the stock market. So get ready. It could be quite dramatic here. And then, of course, this is on the adjusted basis. What's going to look like in real dollar terms? Stock market's going to go crazy. And actually, speaking of which, I had a really interesting conversation with the Wall Street Silver people. And actually, I was just reviewing the conversation I had with Ive on the video here. So this is actually out now. I don't know whether I'll share it in the community. Maybe Chris, if you'd like, you can add it to the description of the video. I'll throw it in the lounge if you feel like watching it. But it was interesting. We spent quite a bit of time sort of going through the mechanics of how the economy works and where are we on the money supply. And actually, it's interesting at this point in particular, we were talking about when is the Fed going to start lowering interest rates and waiting for the market to actually tell the Fed to actually start acting. And so that sort of brings us to what are the sort of economic developments today. Econs taste great. We had ISM services come out, and the other day I had said I was a bit surprised at the weakness in the U.S. manufacturing sector. But I said, well, but the services sector is still pretty strong, so I wouldn't really worry too much about it. And out comes today's data. You can see the headline: U.S. services activity unexpectedly contracts. So if we actually look at the calendar, you can see here is today's data, ISM service PMI. The market was looking for 53. And remember, we talked about a number above 50 implies expansion. Number below 50 implies contraction. And lo and behold, there's a number minus, or not minus, but under 50. So services sector in the United States as well is contracting. And I think that's a pretty big indicator that that the Fed was looking for to actually to indicate that yes, indeed, the economy is rolling over, and maybe their need for such aggressive short-term interest rates is not needed, as the market might even go into a more deflationary situation. Stock market itself seems to be enjoying the news, and more importantly, I think today the U.S. dollar is getting thumped here on the anticipation that the Fed is going to have to actually cut rates. And keep in mind, a lot of the reason why people were piling into the U.S. dollar was because of the incredibly attractive yields of short-term paper. But you can see, what are you supposed to think if you see the market smiling at you? So big old smiles here. And if anything, we might even start thinking about like Foggenbaum targets to the downside, 2.618. What a big surprise. That's basically telling us that looks like the market wants to come right up back against this low. And if that fires and we take out these lows, then that means that even bigger smiles might come in, and we'll cross that bridge when we come to it. I would say in the near term, we've done quite a bit of technical damage here today with this report. So it'll be interesting to see how this plays out. I would say in the near term, going after this low. This low actually was interesting. That was on the Fed announcement FOMC meeting, and when they came out and said they weren't going to raise rates, and then Jerry came out and said, well, the economy is fairly strong, so we're data dependent, blah blah blah. U.S. dollar rallied right back up top. Interesting how the dollar index rallied up against these highs, but then completely failed. So you might even argue that that was just nothing more than just really a textbook reload zone. Counter trend rally and right into reload zones. Brian's favorite fib, 78.6. Oh, what a big surprise. The market started to break. So lots of damage done here by this ISM report here today. To the prospects for higher U.S. short-term interest rates and a stronger U.S. dollar. And interestingly enough, on this event, what's taking off here? Actually, let's go back to this screen. It looked like the gold and the silver. Absolutely love that news. Woohoo! They all took off. Crude oil actually ran into a very significant daily objective. I think I showed you yesterday in the offering that price action. It was pretty impressive, I'll tell you that much. And here is that AB equals CD. But the question you have to ask yourself, is there anything left in the tank here? Or no pun intended. Rallied up into ABCD objectives. I suppose we could probably push one more leg higher, and if anything, that would make sense. A nice little run up, take out the stops up top here. You can see how Willie is stupid, so we really shouldn't be buying. And you can see how the bearish momentum divergence is trying to start to form. So my hunch is that if and when this bearish momentum divergence actually confirms they're on the MACD, then we'll know that we're pretty darn close to a top here in crude. But the point here is, would I be looking for another massive leg higher here in crude right now? No. I would actually argue that we just hit a whole bunch of really important technical objectives. And now with Willie stupid the way he is, we probably just need to let this thing settle down. So this is an interesting commentary. I'd said yesterday that Jerry's been talking recently about how he feels as though the inflationary pressures in our society are basically, they've played themselves out, whether it be things like energy, the econs themselves, he's data dependent, the ISM, basically services sector calming down. And as a result, US dollars coming off. And where's money going? Holy crap. If energy has topped out, and you guys all should be able to answer this now, where's money likely to flow? right? It either goes into energy to pay for electricity, gas, heating, whatever. And if it doesn't have to go in there and actually energy prices are falling, then it goes into technology to improve worker productivity and increase profit margins. So if energy is done, ironically enough, we've also, this is a time tested rule at TRI, we really shouldn't expect to see energy prices and metal prices move up in unison. So the fact that energy prices have basically hit some major key upside objectives, what a surprise. And of course, if you understand, actually watch that Wall Street Silver interviews that I did with them, I explicitly talked about how in April, May, we were actually heading into a window where in the inflation deflation measures were sort of calming down. So as a result, the metals, they also calmed down. We had that oil market perk back up, and I think to a certain degree that didn't help that inflation deflation problem. Now that energy prices have hit that peak, and then we're starting to get anecdotal data from the economy saying that the inflationary pressures are abating. And it might even be because you could argue that higher energy prices, higher gasoline prices, et cetera, is a tax on society and on the economy. That inflationary pressure we banged right up against the trend line, and now we're sort of calming down here. The interesting thing about all of this, though, is this is predicated on the market's belief that this data will actually get the Fed to change its attitude and change its stance. And unfortunately, I'm a little bit worried that, this insane uber optimism here, we've got a big event coming up here at 11 o'clock, which is in about an hour and a half. This might be like a buy the rumor and then sell the news, because we've got a big market moving event that has moved the market appreciably over the past, probably year or two. People have been basically hinged on these FOMC minutes. And what is this report going to say about the most recent conversation at the FOMC about lowering interest rates, dot plots, all that kind of talk? But we'll see. I mean, maybe what'll end up happening here is that the minutes will come out. They'll be relatively tame. As I said recently, Jerry's been talking a little bit more friendly. And the data itself is actually pointing to a little bit of economic weakness. And the irony of all of this, of course, is that the stock market now in its growth cycle, like I showed you from that generational perspective, it's almost like good news is good news for the stock market. Bad news is good news for the stock market. The stock market just wants to go up, and especially these crazy ass tech stocks. I mean, if we pull this up, it's probably the culprits du jour. All right, so we'll probably wind up this free broadcast here fairly shortly. Where is my FinViz? Nope, it's not on this screen. Where is the FinViz? There it is. So let's see who's driving the bus here today. NASDAQ just churning higher here. Interesting how the blue chips, brick and mortar, not really that happy. And Russell 2000, the broader economy, just kind of treading water. Ironically enough, this actually looks very much like our breadth indicator. Actually, maybe in the after party, we'll dig into that a little bit more. What a big surprise. Who's the big winners today? I mean, it's interesting how the NASDAQ can be driven by just a few names. NVIDIA, AVGO, I think that's Broadcom, if I'm not mistaken. Another one of Fink's favorite stocks. And good old Allen. So interesting to see other parts of the tech sector are catching a bit of a bid here. Can I get in on my Intel? I sure want to get it, but I really don't want to have to pay up for it. But we'll see what happens. Only time will tell. But, we are now through the end of June, thank heavens. We're heading into the U.S. holiday weekend. If anything, I've often found that this happens heading into the U.S. holiday. You're going to get sort of a wrap ourselves in the flag. and rah patriotism. Usually the stock market does fairly well into that July 4th holiday weekend. And, if the stocks actually end on a fairly positive note today, I think that's going to set the tone for the coming quarter. So, I suppose the only other thing to finish off, which of course we did just briefly talk about it, cryptos, I've been saying all along here that what I actually like, and I've been seeing this repeatedly, is that the market sort of moves in sort of like almost like a week or two sort of consolidations and then breaks a certain direction. Then it sort of sits in that trading range for a week or two, a couple of weeks maybe, and then breaks to a new range. And I think that we're just stuck still in this range. It was really interesting to see. Everybody went rah bullish there just a couple of days ago. It did look like we were breaking out. And if anything, this is a great analogy. Double bottoms themselves usually only work about 60-70% of the time. I might argue that this down, up, down breakout, it was a false breakout, and that breakout failed and it got stopped out. And I do see that on quite a few cryptos. Sjord, for instance, was kind of getting bullish of this rune. Is this maybe one bottom a little bit early? Could be. And when I look through the list, I'm seeing a lot of these potential W's that were coming in are kind of evaporating, which does lead me to a certain degree believe that this weekend could be a little bit of a tough slog for crypto. But once we're out the other side of this weekend, then I think we'll start seeing a little bit of clear sailing. But don't be surprised if the powers that be are going to want to be like rah America, all that kind of fun stuff. And in a weird sort of way, you could make the argument that crypto, to a certain degree, is almost like an anti-confidence in the system vote. It is interesting to see that, some names that have put in bottoms here recently are doing very, very well. So it's a trader's life. Interesting how we banged into 2.618 on that little guy. So slow and steady wins a race. I don't think we're quite turned the corner yet in this space. Little old ladies, nanny nibbles, go and have some fun. I mean, there are just some great bargains out there. This EGLD was super popular back there in the winter. You can see the bottom coming in on him. There's these names. There's a lot of money to be made on these things. Could we, I used to work with a lady by the name of Linda Bradford Radke a million years ago, and we used to always ask her, how many shots would you take on a bottom or a top trade if you were thinking? And she would always say two. So, like that rune, it kind of waffled there, didn't quite turn the corner. This guy here, you see the W, but we might have a bit of a tough weekend, and this little W gets stopped out. And I wouldn't lose focus. I would just simply say that if you trade setups and these W's fail, well, you just have to respect the fact that they're never going to work 100% of the time, and you got to be in risk management mode. Having said that, the W's there. So, are you a risk taker? Well, that's up to you and your plan. So I think what we'll do is we'll head on over to the after party, maybe take a look at some of the recent screener signals that we got, maybe dig a little deeper into the financial services stocks that seem to be turning, which in a weird way is a validation that maybe indeed the market is smelling that the Fed's near done with their interest rate increases and may even actually start decreasing rates. And maybe we'll take a look more. It was a really interesting report that came out of the crude oil market today here. And did we have one of these buy the rumor, sell the news events in crude oil? Sure feels like it. Okay, so I think we'll probably leave it at that. As I had showed you earlier, these shorts are still working away. It's driving me crazy how monotonous and boring this is, but half of our job as traders is just to simply wait and be patient. And this is a really good example that there just ain't anything to be done in things like Ethereum. And what I'm really concerned about now is, and I see this theme happening repeatedly, but like I said, we'll talk about this more in the after party, but weekly M's are starting to show their heads again. It's very early in the week, so obviously this won't print until Sunday, but not a good sign that we keep showing weakness here on yield corn. Okay, I think we'll leave it at that. Let's head on over to the after party and have some fun there. I think that was about 20 minutes or so, maybe a little bit long. Still got to cut about 10 minutes out of this. But anyway, slow and steady wins the race. Hopefully, we talked about everything. And, as I had said there earlier, in an hour and a half, we're going to have the FOMC minutes come out, and the whole damn picture could change heading into the close today. So, and with the holiday environment, maybe let's take the whole price action that we're seeing with a little bit of a grain of salt. I'm not going to really believe that we are like trending and actually establishing new serious moves in the market until we get on the other side of this holiday weekend. Okay, have yourselves a great day. PMA for the win. All the best. Hugs and kisses. And the only thing left Brian to say to you is bye for now.